Maybe before we start, I'd like to get a feeling of who you guys are, and then I think we'll keep the session like half an hour, and then we can have some Q&A and some discussion. I find that this is often very valuable. Could you just tell me who you are and why you're here? Yeah, you.
A microphone?
Oh, yes. That's true. Thank you. It's on, right?
Hello, my name is Antoni. I'm working for Ident3, that it's an identity project. Although I'm coming from the economic world. I mean, I'm an economist.
Okay.
Also, I work for Deutsche Bank, and then I'm interested to see which is the ideas behind all this concept.
Good.
Hello, my name is George. I'm working in Cambodia on organizational research and education. And I'm just coming here to London for 1 month. And I'm just attending as many conferences in blockchain so I can learn as much as I can and see any application value in Southeast Asia.
Hello, I'm Pascal Isbell. We met yesterday.
Yes.
I'm an investor indirectly in Berlin Innovation Ventures, about to be renamed Lunar, where you're a venture partner. So your colleague introduced us yesterday, and I thought the topic of your book was very good. So my background is I'm basically a stockbroker by background. I've been raising money for a lot of tech companies for the last 15 years. I'm also on the investment committee of Isomer Capital, a venture fund of funds, and we've got several blockchain investments. And David Fauché what's the name of the firm? Anyway, he's one of the co-sponsors of this event, and he's invited me along so I can learn as much as I can about blockchain.
Good. Thank you.
Hello, my name is Christina. I have a product marketing background. I'm still learning about blockchain and cryptocurrencies. And as I told you before, I'm very interested in the token economics. Good. So I look forward for your talk. Thank you.
Happy you're here.
I guess we're just introducing ourselves. Is that
very quickly, since we're such a private round.
All right,
sure. That.
My name's Toby. I work at Gnosis. I have an engineering background, but I work in product right now. I'm working there since the beginning of last year. And I thought the topic of your talk was very interesting. And basically, I'm curious. No other expectations right now.
Okay. Well, welcome. And I'm very happy to be here because I think this new technology, this token, is a digital derivative that is managed by a blockchain. And it will potentially drastically change the dynamics of our economic system. And I'd like to give an introduction of why I think this is the case. So what is token economics, right? If we look into the history of the internet, we can think of the early days of what we called World Wide Web, the Web 1, from today's perspective. It was like hello world. It revolutionized communication. It connected standalone computers. And it brought us what we call the information economy, or as some might remember, information data highway, a fun word that was used in the early 90s. Nobody would use that word because it has become so normal that we're interconnected. So this revolutionized communication, but the internet was still, what it did, we had the internet before the 90s. So the internet wasn't invented in the 90s. We had the internet since the early 60s, actually, or mid 60s. Most people didn't have computers, and when we had the computer revolution in the 80s, these computers were standalone, and if they were interconnected, you would need to know command line computer language to be able to connect to another computer. So the usability wasn't there. Only few people had the knowledge to kind of communicate with other computers that were somewhere else. So what the World Wide Web brought us, what Tim Berners-Lee brought us, was a hypertext markup language that made it easy with a few lines of code to create a website that was visually appealing and allowed anyone, any layman and laywoman, with a few clicks to surf the web. So it made the internet usable, and it made it easy to create a website with a few lines of code. Now, the problem was that most people, even if they learned HTML, which is not really a very sophisticated programming language, they wouldn't know what to put on those websites. So for those, again, who remember the early 90s, many websites for a long time would say, hello world. That would be the first thing people would write on the websites, because they were like, hey, I created a web page, but it would only say hello world. So it took us a while, and the earliest websites were directories, online directories that pointed to other pages. And so the earliest use case of some more sophisticated websites were search engines. How do I find information in that sea of information? So it took us around 10 years until the Web 2 emerged. And the Web 2 wasn't a revolution, it was an evolution. It made the internet more usable, more interactive. The developer stack became also more sophisticated. But it took us 10 years also until we found out how we can kind of apply different types of websites, right? So a website, it took us 10 years to understand that a website is not a website, that some websites are for e-commerce and other websites are for social media, and other websites, maybe we can use them to share knowledge, like, for example, Wikipedia. So that brought us the platform economy and some notion of how to kind of the different use cases of how to use websites. In this context, the Web3 and blockchain really is the driving force of this next generation internet. It's a back-end revolution. It doesn't really change much at the front end of what's happening online, but the way we manage our data and verify transactions and manage values, this is revolutionized in the back end of the internet. And the application of this new internet is our tokens. So what is a token? And what is this new token economy the Web3 enables? Tokens are not a new thing, and the native speakers know that the English language has many applications or many use cases for different types of tokens. We've had asset tokens ever since we used shells for as a kind of medium exchange, but we have tokens. We use tokens when we go to the casino. We have tokens like any bonus miles of your airline would be a token, some coffee machine tokens, some metro tokens to take the subway in New York, some gift certificates, et cetera, et cetera. So many different types of asset tokens have existed. Tokens also have existed in the computing world to manage operations or access rights, and they could manifest as a QR code or, for example, a parcel tracking code. And we've used, for example, this is another example of tokens that have been used in cognitive psychology as positive reinforcement tools to incentivize kind of behavior. Psychiatric wards have been experimenting, for example, in the 50s in the US to change patient behavior. Alternatively, instead of just doing some kind of cognitive or kind of talking speech therapy, et cetera, they rewarded them with tokens if they proved that they changed their behavior, and then they could use those tokens, which would represent some kind of asset token that you could use for some hospital services, like special privileges to watch the television or get better food. Now, why are blockchain tokens such a revolution? Because it's not a new thing, right? But these tokens are quite costly to issue and manage, because you need to make sure that these tokens are copyright protected. Any fiat money, I just got £20 for this book I'm selling, paper for paper, right? This is a token. And we need to make sure when we issue tokens that you cannot copy them. And this management, this anti-counterfeiting protection, costs a lot of money. This is kind of money and time intense, and this is the beauty of blockchain tokens. We can issue them with a few lines of code as a smart contract, or with a smart contract, for example, and we can issue these tokens, and they're collectively managed. The tokens, or the state of the tokens, is collectively managed by a blockchain network. It's a public infrastructure that can be completely public, it could be semi-private, it could be a federation, but we can now manage these tokens, the state of these tokens, at much lower costs. So issuing and managing tokens has become as cheap as maybe in the 90s, issuing and managing an online billboard. This is how people referred to websites in the 90s. They explained them as online billboards. Now, a token contract is a special type of smart contract, for example, on the Ethereum blockchain, and it manages access rights to either something you own or something somebody else owns or a collective owns. So that's it. It's a rights management tool to some kind of value that can be temporary or permanent until you sell this value. It's managed by what we call a software wallet, which is a piece of software that's connected to some kind of distributed ledger that manages, and the tokens are, of course, never in the wallet. Only your private key is in this wallet. This is why it's better to refer to this as not a wallet, but a keychain. Wallet really is a very, very misleading term. All right, so if we look at the state of the token economy today, maybe quick question, do you know how many tokens have been issued until today? Some
4,000 or 5,000.
Okay, 4,000 or 5,000 was one answer. All right. So if we look at CoinMarketCap, this is a public website where you can see all the publicly listed traded tokens. It's around 2,500 tokens that are publicly traded, but these are special type of fungible and transferable tokens. It's not all tokens out there. It's the tokens that we can trade, a very special type of token. If you go on the Block Explorer and look at what's happening on the Ethereum mainnet, we can see that roughly 200,000 token contracts have been issued on the Ethereum mainnet. That's the mainnet only, that's not the testnet, and that's not any other type of blockchain or distributed ledger where you can also issue tokens. Now, many of those tokens on the Ethereum mainnet have been issued for test reasons, are maybe not, but are not functional or operational, but some are. But they could be identity tokens, so you're not trading them. So just looking at CoinMarketCap doesn't give you an indication of how many tokens are out there. So the future is happening. We already have hundreds and thousands of tokens issued for some limited use case maybe, but this is happening and very interesting. Now, the problem is that, yes, the issuance of tokens has become very easy and cheap. But one of the greatest challenges is that most people have no idea what to do. Like, okay, I can issue a token, but what type of token? What's the purpose of the token? What are the properties? What properties do my tokens need to have? And the properties are derived from the purpose. And so the question really is a question of business model or governance model. So what do I want to do with this token? Again, if we look into the early 90s, people were confused what they could do with websites. And it took us some time to realize what we can do with them. So the first question is, what is the purpose? And then I derive my functions. So what we're doing at the Research Institute, we've been trying to do some classification and taxonomies. We try to move away from this very simplistic classification of calling tokens, utility tokens, and security tokens and some kind of other token. That's one perspective to look at tokens, and that's a regulatory perspective. But it's not very useful when you want to design a token. So designing a token, you first have to ask for the purpose. Now, we've tried to come up with some basic classification, and we identified that we have simple tokens, what we call simple token systems, and complex token systems. Simple token systems would be token systems or types of tokens that represent any type of asset or access right that we know today. A ticket to a concert, a ticket, any airline ticket, any share of a company, any type of, any type of asset or access right, real or virtual. We know these things. We can kind of tokenize a Picasso painting, fractionalize it. That's basically an asset, right? And we call them simple token systems because we know these business models. This is nothing new and mostly not very complex. Obviously, there are some technical issues in tokenizing these things, but it mostly requires techno-legal engineering because it's things we already know. And the greatest question is what is the legal engineering around it so we make it compliant with the legal system we have today? It doesn't require a whole lot of it requires a little bit of technical engineering, but it really doesn't require a lot of economic engineering. The second class of token systems would be complex token systems. They're interesting, I refer to them as purpose-driven tokens. And there is a whole chapter in my book on that. These purpose-driven tokens, and an example for a purpose-driven token is Bitcoin itself, actually. They enable purpose-driven networks, and the purpose of Bitcoin is peer-to-peer money without kind of intermediaries. And these purpose-driven tokens enable complex systems, and they require mainly economic engineering. And this is also what we focus on in our kind of research at the Vienna University. So before we get into the complex token systems, maybe a step back to the kind of simple token systems, any kind of asset or access rights. So a token could be a kilowatt hour of energy, a fiat currency, represent a commodity, maybe some reputation, a promise for a product in a crowdfunding, an insurance policy, a ticket to an event, a download of a song, which would be something I own, but if I stream a song, it would be an access right? Or, for example, rewards program in a loyalty airline loyalty program would be an exchangeable asset, and rewards program, if they kind of give you an asset with which you can buy your next ticket or get a reduction on your ticket, it would be an asset. But if that bonus point simply gives you access rights to some kind of senator launch, then it would be an access right? So as access rights, we have tokens that represent some kind of software license, voting rights, stock certificates, etc. So many use cases of things we already know, and we now have a new cryptographic derivative to represent these things. One of the more interesting use cases are stable tokens, because most of these tokens, or some people refer to them as cryptocurrencies, I'd rather refer to them as tokens. Technically, they're tokens, and then we can see, are there more currencies? What kind of properties do they have? So stable tokens have been emerging over the last 2 years, and there are many different ways to provide for a stable token. There's also a whole chapter in the book. And we can see that this is really a thing because obviously we need stability of price for a medium of exchange. And we can see that with Libra and Facebook announcing Libra at the beginning of this summer, they really announced the new era of the Web3. Because if you have an internet giant like Facebook with 2.4 billion users announcing a stable token and their own kind of private infrastructure they want to manage this on, this means that this token economy is happening. I think the more interesting part are these complex token systems. Bitcoin, for example, enables a complex token system. And what most people don't usually talk about, media refers to Bitcoin as an object of speculation, sometimes digital gold, sometimes cryptocurrency. And I think this is a complete misinterpretation of what Bitcoin really is. Yes, it's also a token that represents an asset that can be an object of speculation. But it was designed for a very different purpose. Bitcoin was designed to enable a purpose-driven network, a peer-to-peer payment network. And the Bitcoin token is designed to incentivize and reward productive actions in the network. And the Bitcoin token allows us to move away from how society organizes itself today to how society might organize itself more in a network structure. This is also a network in the end, but it's a hierarchical network, and this is more a flat network. This network has some very high top-down management. There is one legal entity. There are employment contracts that regulate the interaction of the people within the system. The Bitcoin network doesn't have a centralized entity. There are no employment contracts. It's a distributed network of autonomous stakeholders who don't know each other, who don't trust each other, who live in different countries, who have no contractual agreements with each other, and they're all steered by this token, and it's a purpose-driven token, which enables the purpose-driven network, and kind of the mechanism behind it is what we call proof of work in Bitcoin. It makes sure it's designed in a way, it assumes that it's an open public network of untrusted actors, so it's designed in a way, it assumes it's based on the assumption that every actor is corrupt, and the incentive mechanism is designed in a way that it's really, really expensive to cheat the system. And this economic engineering is quite complex, and this is what we focus on, and I think this is what is the more interesting part of this new token economy, because we can now learn from Bitcoin and create other purpose-driven tokens. Bitcoin or Ethereum, the Ethereum token, they are designed to incentivize a universal state layer of who owns what in the network. But we can design tokens in a way so they incentivize kind of social media contributions with good curation, kind of curation tokens, in the form of maybe token curated registries. We can design tokens to incentivize attention through and an example here would be the basic attention token, although I think that the design of the basic attention token in particular might not be the best. Or we can incentivize CO2 emission reductions. And we're doing that in Vienna. We're currently working with the city of Vienna to incentivize CO2 emission reduction by issuing a Vienna token, and then you can then exchange this token for cultural activities. It's in the fetal stages, but it's happening. So as I said, basic attention token, very interesting use case. You will find a chapter in the book of, I think they have a very interesting value proposition. They might not succeed in the long term because they're mixing up a few economic mechanisms. But what they're trying to do is very interesting because they're reversing the role of the whole electronic marketing ecosystem, and you can get rewarded directly through your wallet for consuming ads by getting rewarded with the attention tokens. Another interesting token use case or a purpose-driven token use case would be Steemit. It's interesting because it's been operational for over 3 years. It has over 1 million registered users. I don't think they will survive in the long term. It has serious design flaws, which are also addressed in the book. But I think it's a very interesting use case to understand where this token economy is leading us. And this, both the attention token and Steemit are also very interesting use cases to understand why Facebook announced the Libra token. Because they announced the Libra token as a stable token. But if they get through legislation, I'm quite sure the next thing they will announce is an attention token and a reputation token, and they will build on kind of the path Steemit has kind of prepared, and the basic attention token has prepared. Yes, in Vienna, as I said, we're working with the city of Vienna on a prototype called the CoolTool Token, a cultural token where you get rewarded for culture, if you can prove, it's kind of proof of CO2 emission reduction. And we're building an app where you can track we're using motion tracking apps to see if how they move through the city. And if the CO2 footprint is positive, they'll get for every so-and-so kilogram of CO2 emission reduction, they get a few tokens, and then they can use the tokens for cultural activities. So this is a test pilot. We're in the design stage, early 2020, there should be some prototype out there. So the interesting thing about purpose-driven tokens is that they introduce a completely new type of value creation. And I think if you want to understand the Web3 and the disruptive character of the Web3, you need to understand this. Because if you remember, Bitcoin incentivizes individual action towards a collective goal. And this is and in the absence of intermediaries. And this is quite a new thing, because our current economic system is basically focuses on private goods. And you're incentivized to create private goods and to consume kind of private goods, right? Who knows actually this matrix? This is actually Elinor Ostrom, an economist, came up with this public good theory of different types of private goods and public goods and common goods and club goods. And she also got a Nobel Prize for her economic work on that. And basically, there was a lot of criticism of net external effects of the way our current economic system works. There are many external effects on common goods that are not accounted for, et cetera, et cetera. But to cut a long story short, what purpose-driven tokens do, and I think that's fascinating and we want to research this more, they incentivize individual action towards a collective goal. So kind of, it's a new type of value creation mechanism that transcends this whole old and, in my opinion, outdated communism versus capitalism debate. And this is something we should look at. And it's rooted in what we already know and we call the sharing economy. It's like we already saw it in the Web 2. People are moving away from wanting to own stuff, and they just want to be able to access stuff. And this is now the sharing economy on steroids, incentivizing you directly with a token in the absence of intermediaries. What will that do with our economic system is the big question. So if we look at, and why am I talking about systems? And I think maybe many of you today, some investors I know, a lot of business people, some researchers, but our current economic system thinks very limited and functional, like input-output, and very trying to see the world from a very simple perspective. That has been very useful for a while, but it's not useful for more complex matters. And if we look at, our assumption is that in the end, a blockchain network is a system. It's a complex system, in particular, a socio-economic system, right? Economic systems are part of social systems, are the UK, Austria, where I'm from. Obviously, this nation state, it's a social system, but within that social system, we have an economic system, and we govern this economic system through top-down management of our institutions. And what we're assuming is that these blockchain systems are complex socioeconomic systems that are much more similar to nation states than to companies. So the tools that we will need to steer these networks, whether it's a blockchain infrastructure or a purpose-driven token that incentivizes CO2 emission reduction or a token-curated registry, it's a network that transcends national boundaries of people who want to run in the same direction. They have the same purpose and the same goal, and we want to incentivize. And these incentive mechanisms have much more to do with micro and macroeconomics than with business administration questions. So what we've learned in the 20th century, like personnel management, marketing, I don't know, supply chain management, it's still interesting questions, but we need to address much more complex questions. And I think we need to hire more microeconomists, macroeconomists, network theories, people who understand graph theory, because this is what our infrastructure is building upon. So these complex systems, the difference between these top-down organizations and the complex system is that the system behavior cannot easily be implied from kind of the state change of one or two actors. And obviously, large organizations also tend to be complex systems, but they have these very rigid command and control bureaucratic institutions that try to control this, the chaos. So the problem is that if we look at the token economy or this network economy, this Web3 that is emerging, I think that if we if we apply reductionist tools that do not kind of address these complex issues appropriately, that characterize them as noise, we will have inappropriate tools to understand and to steer what is happening. The cool thing about these, for example, blockchain networks, right? Blockchain is a network. It's steered by the protocol, and then it also has a token, which is kind of the currency of this distributed internet tribe. So it comes in 3 layers. And the cool thing about this blockchain network is that it's an economic system that provides us with almost real-time a rich data set. Our current economic system, like, for example, the economic system of the European Union or maybe of the UK, we don't have rich and real-time data sets. So economists trying to steer our national economies, or, for example, the European Union economy, they usually build their mechanisms on data that's outdated and that's not completely representative or anything near to real time. And the very interesting thing here is that these networks come with real-time data sets. And if we take that and combine it with the advances in data science that we've seen over the last years, we can come up with new mechanisms to steer these economic systems that come with this rich data set. And this is what we refer to economic systems engineering. And so proof of work was the first step to enable kind of economic steering of an kind of autonomous network of untrusted actors. But I think we can do better. And this is what we're working on at our institute. And we're creating this new academic discipline that we're calling economic system engineering. And we're combining economic methods with engineering, rigorous engineering methods, control theory. All these methods that engineers have been using for decades to build kind of mission-critical systems like rockets or bridges. And the type of rigor that's been applied and the economic and the engineering ethics that have been applied to build these mission-critical systems is much more rigorous than what we've been using in classical economics. And this rich data set and the advances in data science allow us to combine economic methods with engineering methods to enable the steering and regulation of these complex systems. So what we're saying is that the question is token economics a new type of economics? Obviously, token economics is a subset of economics. It's not this new thing. It studies the interactions of and the institutions and the policies of all the production and distribution and consumptions of goods and services that have been tokenized. And the numbers I gave you before very clearly show that we're moving towards a full tokenization, potentially, of our whole economy, of everything we're already doing today, including all the new goods and services that we will be offering. So yes, it's economics, but it will probably have a whole set of new dynamics. And this chart is very interesting. It shows you who's an economist here. There was one economist, right? So as you know, there are many different economic schools, some of which are contradictory, some of which are overlapping. And it doesn't stop here because there is a second part to the slide. This is the lower part. So we have many, because very often engineers come to us and they're like, oh, what's the inflation rate we should do for our token? And they're already post-ICO raised 200 million. And now they want to know from us how to kind of set their inflation rate. And we're like, and we need an economist. I'm like, what type of economist do you need, right? Microeconomist, macroeconomist. What are your economic assumptions? What is your system? And very often we find that these people, and that's very important, that are building these really, really amazing blockchain infrastructures, they're engineers that look only input-output, and they've never done a system mapping. So when we come and we want to map the system, and mapping the system takes 2.5 months. We now had a project with one of those networks. We can't say more. And they didn't understand what we're doing for 2.5 months. We were just trying to understand, kind of map their system, because you need to understand if you change something here, it can affect things here and here and here. So you first need to map the system and the system dynamics before you can go into the engineering part of how do I set an inflation rate of that economy, et cetera, et cetera. So economics is a bitch. It's very complex. And it's quite a young science, and very often has contradictory schools. And now we have these economic networks that are, in a way, kind of mission critical. And this is what I would like to say. The problem is that Bitcoin, it was never designed and tested in a cat tool, right? Nobody tested that system. There was a white paper, then people came together and they created the code, they deployed it, maybe there was a test net in some cases, right? And, but then you go into mainnet. And you have these mission critical systems that come with thick inbuilt economic layer. But we're designing these systems like they were websites in the 1990s with the same kind of startup mentality very often, kind of quick and dirty, pivot as you go along, kind of design. But the problem is if you don't account for unknown unknowns, if you don't treat them as mission critical systems, things happen like, oops, smart contract was drained, 50 million gone, the DAO. Oops, smart contract, multisig problems, 250 million gone, right? So these networks, it's not a website, it's not Yahoo, it's not a search engine. So the way we treat the development of these systems needs to be different, or the engineering methods that we use need to be a bit more, use more rigorous ethics, engineering ethics, in fact, than what we applied in Silicon Valley, et cetera, to build these early websites. Isn't it just economics? Yes, but the interesting part is how will the system dynamics, our economy change? If we can tokenize everything, if I can in the future have a wallet which holds maybe thousands of different tokens that are fungible, my Apple token for your peer token, for I don't know, whatever fungible token, we might enter a digital barter economy without the coincidence of once problems that analog barter economies had. Because we can air swap wallet to wallet our tokens. And then the question is, where will money, like fiat money as a medium of exchange, or any type of stable token, will there still be a need for these kind of stable tokens if you take algorithmic decentralized exchanges paired with atomic swaps? We could enter in a few years a digital barter economy that could potentially completely change the dynamics of our current economic systems. So many questions to conclude. Yes, this new token economy, it's potentially a new type of value creation, but the problem is we lack best practices. For the most part, we still lack modeling and forecasting tools. There are many, many legal uncertainties. There are also technical usability issues, wallet management, key management, multi-token capability of wallets. Decentralized exchanges are not really a thing yet, but people are working on atomic swaps. But once we transcend all these things, things will get more interesting, but one of the greatest challenges we still have is that we use different words to talk about the same thing, so we need clear taxonomies. Also one of the reasons I wrote this book. So if you're interested later on, you can sneak peek into the book. And one of the things we did to finish this now, this is something you will find in the book, is just do this kind of table where we talk about the properties a token can take. And when we presented this, beginning of this year at university, all the researchers were like big eyes and they were very interested and they thought it was eye-opening, and it's just a table. So, and for us it was quite obvious to write this kind of write down and classify those perspectives of rights perspective. Is it a property right or an access right? Fungibility perspective. Is it identical or not identical? Transferability perspective. Can you transfer the token or not? Those are design questions that you have to ask yourself. The durability perspective is very important. I mean, it's programmable money. You can make it expire after a while. Regulatory perspective is a very important perspective, but it has had too much importance, like people were focusing too much on it. Another question is the incentive perspective. Is the token minted upon a certain behavior, or does it represent some type of known access right? Supply perspective, what is the supply of this token? Is it fixed? Is it unlimited? And the token flow perspective, is it linear or circular? Is it from source to sink, or does it circulate? Now, this is just the first draft of how we could classify different properties of tokens. But if you want to go into token engineering, into designing the governance rules of your tokens, these would be the main questions you would have to ask yourself. And from that, then you can derive the regulatory question of what type of token is it, right? So as you can see, we're at the very early stages, and I have much more to say, but I'd rather give you a chance to ask questions. Thank you very much. So there is a mic somewhere. Any question?
It's not really a question, but I was wondering if you could give us some more details about the work you did in mapping the systems without mentioning any companies or, I don't know, your secret sauce, just thank you.
So, yeah. It's hard to, so what we do is that we identify the different actors in the system, and then we identify the kind of the value flows. There are so many different graphs of what is happening. Like, who are the actors? What are the value flows? What are mechanisms, and what are kind of the results of these mechanisms, to say that in a more abstract word. So we're trying to map all the dynamics of a system, and usually it comes in 3 to 4 layers. And then once you've mapped the whole complex system, you can then go into designing the economic engineering of that system. Yeah. Any other question?
Do you think there is or will be a significant pushback against the tokenization of everything?
I'm surprised to see so little pushback, right? I think obviously regulators, and we can see that with the Libra token right now, they're very critical. I mean, there's always the anti-money laundering questions, etc. But I'm surprised. I've been in the scene for 4 years now, or 5 years, and I'm surprised to see how little pushback actually there is. And I guess because the use case is so obvious. And we live in a capitalist society that favors a return on investment. And the business case for the return on investment is so clear because it cuts so many transaction costs, so many operational costs, this technology, right? So I guess because people can see the benefits, there are very few pushbacks that I'm seeing.
You spoke about how it could replace stablecoins. Do you think they would have some pushback in the future?
Well, I think we need stable tokens right now, or stable coins, right? There is a big need for stable tokens because the way most tokens are fluctuating in price, obviously, because of demand shifts. And to be able to operate a token economy, currently, we need a stability of value. One of the properties, and I talk about this in the book as well, what is money and what are the properties and the functions of money? And one of the properties is obviously stability of value. So when Bitcoin was designed, the value proposition and the title of the Bitcoin paper is peer-to-peer electronic cash. So I think the Bitcoin white paper or the implementation of the Bitcoin white paper was very successful when it comes to the peer-to-peer character, to providing a universal state layer. In fact, that's really revolutionary what proof of work did. But what Bitcoin failed is to provide the stability of value, which would be a prerequisite for having electronic cash. And this is why we're seeing a lot of stable tokens popping up. And I think in the short term, we will need them. And one of the more interesting use cases are actually what the IMF calls central bank digital currencies. So what national central banks all over the world are now looking into and doing is they're creating a digital cryptographic derivative, a token, a blockchain token, that represents a unit of national currency. That's very interesting because it will eradicate private banks in the long run. And they will probably in the long run be maybe more successful because they already have stability of value, most of them. They will be probably the go-to stable token unless algorithmic stable tokens become more stable than they are today. So we are seeing different types of stable tokens, algorithmic stable tokens, asset-backed stable tokens, backed by an asset, a basket of different types of assets. And then we have central bank digital currency. And I think we will need that until we have atomic swaps and multi-token capable wallets. We will need some kind of stable token. So there is a merit in them, but maybe in the long run, they might not be necessary anymore. Maybe. Like, there's really no way to predict the future at this point. Yeah. Any other question?
Do you have the feeling that recently, with a lot of tokenization projects, more and more of the value of token issuance is distributed towards the token issuer rather than the token holder over time? So I just observed that, like, maybe a year ago, a lot of tokens.
I don't know why there is an influx of people. Maybe for the next talk. All right.
It's like I've just seen, like, maybe a year ago, a lot of tokens, they were issued like straight away, and if the network grows, the value accrues with the token holder. Whereas nowadays, more and more tokens are issued like in batches.
Okay, yeah, I mean, this is the question of what I said here. Like, when you design your token, one of the most important questions is the supply perspective. How many tokens do you supply and when, right? And most early token sales were conducted for the purpose of just issuing a token for fundraising purposes, and the people very often didn't have sophisticated economic design behind it. So yes, we're seeing that shift in kind of the economic design from a supply perspective. But people are still, so I think people are more and more learning that it's not, you don't issue tokens unless they represent a share in a company. You can't issue them the same way. You issue shares in the company because the network has different dynamics. It's kind of a currency of a tribe, right? And people are, so we don't have good token economics yet inbuilt. In most of the token designs are very, very bad token designs. So it will still take a few years until we fully enter a more mature token economy. We're in the very early stages where websites, like in the early 90s, were still bad usability and unclear information, etc.
Okay,
yeah.
Thanks.
Okay, I think we might need to stop because there are so many people coming in, and I think they're coming in. Do we have time? No? Okay. So if you have questions, we'll go outside. There is the next speaker coming, and you can ask me the questions outside. Thank you.
Thank you.